Hey everyone, welcome back. We're going deep on Pitti Engineering's Q2 FY25 financials today. And guys, let me tell you, these are some exciting numbers. We've got the company's official statements, of course, the auditor's report, and the investor presentation too. Spoiler alert, Pitti Engineering is hitting best ever performance left and right. So let's jump right in.
Before we even get to those impressive profits, there's a lot going on behind the scenes with Pitti Engineering. To really understand these numbers, you need to understand the restructuring they've been doing.
Yeah, they've been on a bit of a merger and acquisition spree, haven't they?
Absolutely. First, we have the amalgamation of Pitti Castings and Pitti Rail and engineering components. Now, technically, this happened last year, but the financials have been restated to reflect the amalgamation. So when we're comparing year over year, it's all apples to apples.
Makes sense, but they didn't stop there, right?
Oh, no, not at all. This year, they acquired two more companies. Bagadia Chaitra Industries, which has been renamed Pitti Industries, and also Dakshin Foundry. Both were 100% equity acquisitions. All these mergers and acquisitions, it can get pretty complex to keep track of.
It really can.
For someone following Pitti Engineering, why is this all so important?
Well, because it directly impacts the numbers we see in these reports. These moves change their revenue, their profits, even their production capacity. You really have to factor all that in if you're trying to understand their growth.
Right, good point. So with all that restructuring in mind, what were some of the big wins that jumped out at you from this investor presentation?
Oh, well, their consolidated profit after tax for the first half of FY25, that's H1 FY25, grew by a massive 105% compared to last year.
Wow.
That is a significant jump. And it shows they're not just growing, they're becoming way more profitable too.
That's incredible, 105%. And what about revenue? Did that keep pace with the profit growth?
Yeah, it did. Consolidated total revenue is also up significantly, about 37% year over year. They're firing on all cylinders.
Fantastic to hear. Often with these consolidated figures, I do get curious about the standalone performance as well. How did Pitti Engineering itself do before we factor in all the new pieces?
That's a sharp question. The standalone performance was also strong. This tells us that Pitti Engineering's core operations are healthy and contributing to this success.
So we see the top-line numbers look amazing, but what's actually driving this incredible growth? Let's dig into the reports a bit, see what's going on beneath the surface.
When you look closely at the reports, we see revenue from operations definitely grew significantly. But there's another piece of the puzzle here. Other income also played a role.
Other income. That always makes me a little curious. What falls into that category exactly?
It could be a few things. Interest from investments, gains from selling assets, maybe even one-time payments. To really get the full picture, we need to go even deeper into the notes to the financial statements. That's where they break down all those components of other income.
It's a good reminder that we can't just focus on that big revenue number. Got to understand where it's all coming from. Now, there's another metric I've been hearing a lot about, EBITDA. What is that exactly, and why is it so important?
EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a way to look at a company's core operating profitability. You're stripping away some of those accounting factors, those things that can sometimes make the picture a little less clear.
So in Pitti Engineering's case, what's their EBITDA telling us?
The good news here is that their EBITDA grew even faster than their revenue. This suggests that they're becoming more efficient with their operations, which is a very positive sign. Strong EBITDA growth is definitely what you want to see.
Absolutely. Now, remember all that corporate maneuvering we talked about earlier? Well, even the auditor made sure to really highlight the restatement of financials due to the amalgamation, emphasizing how important it is.
Yes, and that's not just a technicality. It really underscores how vital it is to understand these actions. When you're evaluating a company's performance over time, it's all part of getting that full story.
For sure. So we've got a good grasp now on the overall financials, but the investor presentation also gave us some really interesting details on their sales breakdown. It's not just about the big numbers, it's about understanding what's happening within those numbers.
Exactly. This is where it gets really interesting. They break down sales by product type and by end user industry. So we get a much more granular look at their operation.
Okay, I'm all ears. What stood out to you? What story are these details telling us?
Well, for starters, while loose laminations and low-value assemblies, those still make up a big portion of their volume, but they're seeing solid growth in high-value assemblies.
So they're not just churning out the same old products. They're moving up the value chain, which usually means higher profit margins. What about the industries they're selling to? Any shifts there?
Their biggest market is still traction motors and railway components. But here's the key takeaway. Their customer base is becoming more diverse. We're seeing growth in other sectors too, things like power generation, industrial motors, and even renewable energy.
They're not putting all their eggs in one basket, huh? That's a good sign of some smart long-term thinking, especially if demand for traction motors slows down at some point in the future.
Exactly. It suggests they're really positioning themselves strategically, capitalizing on multiple growth opportunities. That diversification helps them weather any potential storms in specific industries.
It makes a lot of sense. Now, with all this growth, I have to wonder, are they running into capacity issues? Could that become a problem?
That's a great question, and it's one that any savvy investor should be asking. Let's look at their capacity and utilization figures.
Hold that thought. We are at the end of part one of this deep dive. Join us for part two as we continue unpacking Pitti Engineering's remarkable Q2 FY25 results. Welcome back. So before the break, we were starting to get into capacity and utilization. Always a key factor when a company is growing this fast.
It is. It's one thing to have the demand, but can they actually meet it? That's where capacity comes in. And the reports show some interesting figures.
Yeah, what are we seeing? Anything that raises a red flag?
Well, they're clearly aware they need to keep up. They're breaking down utilization rates for different areas, sheet metal, machining, and castings. Each one's a little different. Tells its own story about how they're managing things.
Okay, so it's not just overall capacity, but how efficiently they're using their resources in each area. Makes sense. And I'm guessing those recent acquisitions are playing a role here as well.
Oh, absolutely. Remember, Pitti Industries and Doction Foundry, those were strategic. They're bringing additional capacity in key areas to help support all this growth.
It's all starting to come together. They're not just buying up companies randomly. There's a clear strategy behind it. But high utilization rates can be a little tricky, right? It's good that demand is strong, but it can also be a warning sign.
Exactly. If they're running at full capacity all the time, it might mean they need to invest even more in expansion. Otherwise, they risk hitting bottlenecks, slow them down, impact their ability to fulfill orders, all that.
So are we seeing that with Pitti Engineering? Are they pushing their limits, or do they have some breathing room?
Well, there are definitely some areas of getting close to full utilization. It's something to keep an eye on, but I wouldn't say there's a major red flag just yet. But, if demand keeps growing at this pace and they don't stay ahead of it, it could put pressure on their profit margins.
Good point. It's a balancing act for sure. So we've got incredible growth, smart acquisitions, a watchful eye on capacity. Overall, what's your take on the outlook for Pitti Engineering? Are they on a sustainable path?
Well, management is certainly optimistic. They're projecting continued growth. And frankly, looking at the numbers and their strategic moves, I can see why.
That's encouraging to hear. But it's not all about the company itself, right? What about the bigger picture? Any broader industry trends that could impact Pitti Engineering, positively or negatively?
That's a crucial question. The global engineering sector is facing some headwinds. Supply chain disruptions, rising costs for raw materials, geopolitical uncertainty, you name it. It's a complex landscape out there.
Yikes, yeah, that doesn't sound easy.
However, there's also a lot of positive momentum, particularly in India. Their engineering sector is really booming, driven by government initiatives like Make in India and increasing demand from a whole range of industries. So it's a bit of a mixed bag globally. But Pitti Engineering is well positioned within a very favorable home market.
Okay, so they've got some strong tailwinds at their back, at least in their primary market. That's good. And speaking of positive signals, didn't they also recently complete a pretty big fundraising round?
Yes, they completed a qualified institutional placement, raised significant capital. That's a clear sign of confidence from institutional investors. They're betting on Pitti Engineering's continued success.
Definitely a big vote of confidence. It all sounds very promising. But of course, we need to remember, these results are only for the first half of FY25. There's still a long way to go before we have the complete picture.
Absolutely. This is just a snapshot in time. It tells a compelling story, but things can change quickly. It'll be important to stay informed and see how they navigate the evolving landscape in the coming quarters.
Right. So much can happen between now and the end of the fiscal year. All right, we've covered a lot of ground here. Let's take a step back, recap some of the key takeaways. What really stands out to you as particularly interesting or perhaps even surprising?
Well, the sheer scale of their profit growth is definitely noteworthy. 105%, you don't see that every day, especially in a sector like engineering. It's a sign they're executing their strategy very well and finding ways to really optimize profitability.
I agree. And for me, what stands out is their strategic thinking behind the acquisitions. It's not just about boosting revenue, it's about deliberately adding capacity in specific areas that align with their growth plans.
Excellent point. It underscores the fact that successful growth is rarely accidental. There's usually a well-thought-out plan driving it all. And it all ties back to the importance of looking beyond those headline numbers. To really understand a company, you have to dig into the details, understand the context, and think critically about the risks and opportunities.
Couldn't have said it better myself. And as always, we want to leave our listeners with something to think about. So, what's your final thought provoking question for today? What should people be pondering after this deep dive?
We've seen how Pitti Engineering is capitalizing on India's booming engineering sector. But looking ahead, what role could they play in actually shaping the future of that sector? Could they become more than just a participant? Could they emerge as a true leader in innovation and sustainability?
Wow, that's a big question. Our listeners will definitely have some food for thought after this one. And that brings us to the end of part two. Be sure to join us for the final part of this deep dive where we'll explore.
Welcome back to the final part of our deep dive into Pitti Engineering's Q2 FY25 results. We've really gone through their financials top to bottom, analyzed their strategic moves, and looked at that broader industry context as well. But there's that old saying, the numbers only tell part of the story, right?
That's right. And in this final segment, I want to touch on something that I think often gets overlooked when we're looking at financial analysis, the human factor.
The human factor. I thought we were talking about balance sheets and profits.
Of course, those are important. But behind every successful company are the people, the employees, the management, the culture. And in Pitti Engineering's case, their investor presentation actually gave us some pretty interesting insights into this side of things.
Okay, now I'm intrigued. What kind of insights are we talking about here?
Well, they highlighted their commitment to employee training and development. They're showcasing initiatives to upskill their workforce, getting them ready for what's next. That's really interesting. It's easy to get caught up in the numbers sometimes. But a skilled and motivated workforce, that's a huge asset for any company. How does this tie into the big picture for Pitti Engineering?
It's all about adaptability and innovation. The engineering sector is constantly evolving. New technologies, new challenges popping up all the time by investing in their employees. PD Engineering is making sure they have the talent and the expertise to stay ahead of the curve.
So it's not just about having the right machines and factories. It's about having the people to run them, to innovate, to adapt to those new technologies.
Exactly. This focus on human capital, their people, could really be a key differentiator for them in the long run. It shows they're thinking strategically, not just about the next quarter, but about the next decade.
I like that. It's a good reminder that even in a world of automation and AI, people are still a company's most valuable resource.
I completely agree. And with that, we've reached the end of our deep dive. We've really explored Pitti Engineering's financials, top to bottom. We analyzed their strategic decisions and even considered the broader industry context, too.
We've covered a lot of ground. But as always, we encourage our listeners to keep digging, keep learning.
That's right. There's always more to discover. And with that in mind, I'd like to leave you with one final thought. We've seen how Pitti Engineering is capitalizing on India's booming engineering sector. But looking ahead, what role could they play in actually shaping the future of that sector? Could they go beyond being just a participant? Could they become a true leader, driving innovation and sustainability for the entire industry?
That's a great question to end on. Plenty for our listeners to consider.
I hope so. And on that note, thanks for joining us on this deep dive into the fascinating world of Pitti Engineering.
Until next time, keep diving deep, stay curious, and we'll see you back here soon for another deep dive.